to me, it's like LinkedIn has been very, very powerful for me. Um, and ultimately, that's probably the single largest source. But it's
Really?
just been a tool that's allowed me to connect with mostly my existing network. Um, so combination of those things. I have a podcast, which I think is a great middle of funnel strategy. I don't think it's a great top of funnel strategy. Being a guest on other people's shows has actually proven to be a very good strategy as well. So getting on other people's stages works
Hmm.
very well. But it's really not just one thing. I've got a lot of coals in the fire.
Hi, Adam Gower here, founder of GowerCrowd.com and host of this podcast YouTube series, The Allocator, a new way to finance real estate, all about the capital allocation industry, capital allocator industry. And my guest today is Randy Smith. What an incredibly charming gentleman Randy is of Impact Equity LLC. And I send out a newsletter every week. I'll tell you how to get to that in a second. And one week I said, hey, listen, if you're an allocator and you'd like to be on my podcast, let me know. And Randy wrote back with the statement, I am an allocator. Oh my goodness me. So he has been quite successful. He's also got some war stories and some lessons learned that you're going to hear about. He talks about the allocator business in some detail. Beautiful. He's very descriptive. He has a very different approach to it than others that you've heard about or from on this series. And there's a little special bonus. Before we started talking, I asked him about LinkedIn. He said he wanted to up his game on LinkedIn. So I promised him, I said, when we finish recording, right at the end, I'll show you some ways to improve your profile and increase and improve your networking. So stick around for that. Right at the end, we do a screen share. I go through his profile. We cut it short because I get going a bit, and so we went longer than he had time for, unfortunately. You get the general idea, and these would be tips and tactics and ideas that you can also implement on your own LinkedIn profile. Right? To get on my newsletter, go to gowercrowd.com and click, or to subscribe, click on the subscribe button, and also navigate to the podcast page where you will find links to Impact Equity. I think Impact, let me just make sure I said that right. Impact Equity, and also to Randy's LinkedIn profile. And like I say, do subscribe to the newsletter. My newsletter comes out once a week and covers everything really you need to know about real estate investment and finance in the syndication world. Okay, enough of that. Randy Smith, Impact Equity, coming right up. Randy, super good seeing you. Thanks so much for responding to my newsletter. Actually, I said, hey, if there's any allocators out there, I would love to have you as a guest. And here you are. Thank you. So you wrote to me a few things, but one thing you opened with, I am an allocator. All right. So in the spirit of what this entire season is about, what does that mean?
Good question. Well, first of all, Adam, thank you for having me on the show. Excited to be here, excited to get in front of your audience, obviously. Yeah, so what is an allocator? An allocator is somebody who pools investor capital from retail investors. I personally bring those funds in through the fund of funds or an SPV, and then I bring those dollars together and place those with a predetermined asset, predetermined operator to get better terms and better economics for my investors.
Right. Right. So, gosh, that immediately tees up about 12 questions. But
Okay,
right.
very
So
good.
let's start with the better terms. So what comes first? How do you operate? And actually give me some specific examples. Like give me a case study example, classic
Yep,
allocator case study example, like from beginning to end. You found a sponsor, etc. You negotiated.
absolutely.
How does it
Yeah.
work? Go.
Yeah, so a great example would be a project that I'm just wrapping up. It was my second project I did with this operator. It was an operator that I had actually been wanting to work with for about 2.5 years. I personally invested with these folks about a year and a half ago. And then I was very pleased with how the investment was going. They made it through my due diligence, and I made the decision I wanted to share their deals, their opportunities with my investor base. So started early on, made the decision I wanted to work with them, and then the next deal came out, did my very quick due diligence, shared with the operator that I wanted to partner with them on this deal, and surprise, surprise, they said, well, let me check with our investor base, and then I'll get back to you if we need bigger checks at that point. So initially what's going on there is that the operator, he wants to go and raise capital from the cheapest options possible, which is his direct connections. And if he's able to fill his allocation, then he doesn't need guys like me to come to the table because I'm more expensive ultimately. So we had a few different deals that we missed out on because they were able to fill those very, very quickly. And then finally, I made the decision that I was going to move forward and raise on a deal just simply at the regular retail investor terms to start to build that relationship with this operator. Although I had personally invested with them, you know, I think operators run into allocators like myself that promise the world and then bring very small checks to the table. So I made the decision just to do it with the retail investor terms. I was able to bring
What are the terms?
$850,000.
Hold on. Sorry, I cut you off right before you said how much you're able to bring, which was a really big mistake. How much
Yeah,
you're able to
absolutely.
bring?
So I think we brought 850,000 to that deal.
And what were the terms that were you called the retail terms?
Retail terms, 7 pref, 70/30, some second tier waterfall,
Okay. All
probably an
right.
eighty
So
twenty or something like
normally,
that.
what you would prefer to do is to cut some kind of preferential terms. So it might be an 8 pref, a 9 pref, and a 60. I'm sorry, an 80/20 or a 90/10, whatever you can negotiate. And then
Exactly.
typically you would harvest the delta, would you, for yourself?
Essentially, yes.
Okay, right. So that's what
Yep.
you do. So how did you make money on that deal then?
Yeah, so I do charge a due diligence fee on the front end. So I charge a 2% due diligence fee. I
2% of
charge
what to who?
2% of the dollars raised um, are what I'm charging as the fee. So if I raise $1 million, I'm going to earn 20 grand on the front end.
Okay.
And that comes out of the funds from the investors.
Okay. All right.
So I take total funds received less expenses. Expenses would be legal costs to set up the fund, due diligence fees, portal fees, those types of things. And then I wire the remainder to my investor or
Okay, you
to the
actually,
operator.
okay, so my internet suddenly said it's unstable, which is very odd because I have blistering speed. So hopefully that won't cause a problem. But you said 2%. Let me just clarify that. So you get a 2% of the amount that you raised comes from your investors. So they invest 1 million, and so you would, before you distribute that to the sponsor,
Yeah.
you would take your 2% out. And then what other fees, Randy?
Yeah, so there is legal documents and entity creation fees. There are blue sky filing fees. We have portal expenses. We have, accounting expenses. We use third-party accounting, so we can provide P&L and balance sheets for the funds. But all of those fees come out before we wire the funds to the operator.
Okay.
And yeah, so that first deal, we committed to 750 and we brought 850.
Okay.
So the next time a deal came up, I was able to negotiate better terms.
Okay.
And very specifically, what I was able to negotiate was 9.5% preferred economics
Okay.
on this deal. Okay.
Got it. And then the promote stayed as it was, 70/30, or however you had it already.
Yeah. So the way this was working on the second deal was a rebate on the acquisition fee on the front end, and then a portion of the promote on the back end.
Ah, okay. So there was okay. What's a rebate? You mean you also got a fee based like a percentage of the acquisition fee?
Yes,
Okay. And then better economics on the promote side. So I mean,
exactly.
and what were those economics?
So it totaled about 9.5%.
So 9.5 on the pref, but the split, you talk about the split. So it's a 70/30 after a 9.5 and presumably 7 to other investors. So
Yep.
did you get a split? Did you get a better terms on the promote as well on the 70/30?
So on this specific one, no. It
Ah,
was a
got it.
flat percentage on the back
Okay,
end. On other ones, I have negotiated like a 92-8 on a project
got it.
where retail investors were 70-30, but we negotiated a 92-8 on the back end. So it's really, there's a lot of flexibility here. Negotiations, you can go, um,
Well, hang on. Yes. So let me just ask this because you've said something again. Again, just I'm just really
yeah.
legitimately curious and interested in how this works. You said a flat fee on the back end in this deal. So how
Yeah.
does that work? I've not heard of that
So
before.
it
Normally you would say you get an
was,
80-20 instead of a 70-30, and you would harvest that delta,
yep,
right? Your
yep,
investors get the 70, you get the 10, right?
yep.
The split. But in this case, you said a flat fee. So how does that work and how's it calculated?
Yeah, so on the front end, it was 2.5%. On the
Right.
back end, was 6.5% or 7% of the dollars that were brought to the table. So we do a 70-30 split. In
Yeah.
addition to the 70-30 split, there's an additional rebate on the back end as well. That's
How is
paid to
that
the fund.
calculated? Yeah, I don't quite understand that.
It's based on the dollars raised. So if we
Yeah.
brought $1 million, we would
Yeah.
get 65 grand on the back end.
Oh,
In
uh,
addition to the split on the back end.
right. The 70-30 stays the way it is. That doesn't change.
Exactly. Yep. So if
But
there's $1 million raised and there's $1 million profit,
yeah,
we're going to get 700,000 on the back end because of the
that goes to your
70-30.
investors.
Everything technically goes to the fund,
Okay.
right?
Yeah.
And then the fund pays the investors depending on
Right.
what that
So
split
the
is. Okay.
so the fund would pay them the 70%, the 700,000 pro rata to each one of them. And then the extra 65,000, that's your fee.
Nope. All dollars are distributed through the fund structure,
Yeah.
which my fund, I generally do a 85-15 split. So 85% of the fund earnings go
Ah,
to investors, and then 15% goes to the managers of the fund.
okay, I see. So the fund has its own promote structure.
Yes,
So okay, I see. And that so any income to the fund is split 85-15 with your investors.
exactly. Yep.
Okay, after expenses. So you do
After
also charge
expenses.
expenses like due diligence and etc.
Yeah,
So
so the due diligence is only on the front end. The only expenses throughout the hold period are systems, portals, taxes, K1 prep, legal entity
admin.
fees, filing
Yeah.
fees, that kind of stuff. Yeah, it's
Okay.
all pass through expenses.
So I'm going to ask you some questions you might not want to answer, and that's totally fine.
Yeah,
You don't, really don't
yeah.
mind. So just tell me,
I'm
right?
an open book. Absolutely,
Just
Adam.
say
Ask
pound
away.
sand. Okay, so you talked about a sponsor. Can you tell me who the sponsor is? And if
I
not,
cannot do that. No, these are
fine.
506B opportunities, so I wouldn't be comfortable sharing
Well,
those.
you're not raising money for them now, but that's okay. It doesn't matter. All right.
Yep.
But what are their characteristics? Tell me what their characteristic. How many, like, how
Yeah.
long they've
So
been
this
in
one
real estate? Yeah.
is, let's call it 4 billion AUM.
Okay.
They have 100 plus active projects. They've got 25 to 35 full cycle deals. Large shop, fully
Okay.
integrated construction management, property management.
Really? And
Yep.
so how much so in this deal that you did, what was the size of the deal that you brought 850,000 to?
I'd have to
Approximately.
look at the deal. Call it $10 million raise,
Okay.
$12
Ah, I
million
see.
raise.
So a
Yeah.
$30 million deal,
Yeah.
approximately. And it was value add or is multifamily value add or
Yep. This was multifamily. Yep.
multifamily?
Value
Okay.
add.
I see. Okay. Right. So you actually brought something up, and that's compliance. So how do you steer clear of, not steer clear of, how do you ensure that you are compliant? Because you've actually described being paid a percentage of the amount raised, which
Good question.
you
Yeah.
can't
Really good
be.
question.
Yeah.
So the fund earns the rebates and the fund pays its management. So the fund pays the managers based on activity. Okay.
Yeah.
So the guidance I've been given through a dozen plus SEC attorneys
Uh-huh.
has said that this structure satisfies the requirements by the SEC.
Okay. Okay, good. Right.
Which
So,
is interesting though, because
yeah.
if you line up a dozen SEC attorneys, you're going to get a dozen different answers due to pre-existing and substantive relationship and to,
Well, that's on a
transaction-based compensation.
that's a 506B
That's
offering,
correct.
not a
Yes.
506C is different. So, but what I'm getting at is the idea that any compensation can be paid to anybody as as a percentage of the amount raised.
Sure.
Right. So that was all I was
Yep.
interested in is how that was. So you've raised in total 13 million so far. Is that
I personally have raised a little over 9, and then partners that I brought into deals have brought an extra 4 million.
interesting? Because you said you also help other people do this. Is that right? Helping teach other sales professionals how to do the same. So right. So just describe that. So what does that involve?
So the line that you're referencing, I
Hmm.
shared that was teaching other sales professionals how to passively invest, right?
Oh, I see.
So
Okay.
that's what that was. I
Right.
do also do some coaching and consulting around capital raising as well. And very similar, um, I just share what I have learned over the last 2.5 years in this space
Hmm.
and teach them the structures that I use.
And so what's your background in real estate?
So I started in real estate 2018, 2019, single family out of state investing. I
Okay.
bought some turnkeys, I did some burst strategy, and then I started personally passively investing back in 2020, let's call it.
Okay.
Um, and I've invested as an LP in 25 projects across 12 different operators. And now we've done 18 projects in this space as well.
In the allocator space, as an
Yes.
allocator.
Yeah.
Gosh, there's so many things I want to ask you. As an LP, which
Yes.
is not the focus here, as an LP, what kind of asset? Just let's do this quickly. I'm just really curious.
Yeah.
As an LP, what kind of assets have you focused on, Randy?
80% multifamily value add.
Okay.
I've done self-storage, mobile home, um, an ATM fund, debt
Okay.
funds.
And how is that portfolio performing? Because you came in at quite an interesting moment.
I did. I did. I had one full cycle deal before things got tough.
Uh-huh.
About half the portfolio has paused distributions. I have received capital calls on 2, and I might have a total loss on 1.
Okay. And the others, and you've got distribution stopped as well, but no capital calls on some of them.
The majority don't have capital calls.
No
I've only
capital.
had 2,
Okay.
it's 2 or 3 capital calls. Um,
And as an LP investor, how much have you invested total, do you think?
uh, I'd rather not say. We'll
No
just say
problem.
it's about 50% of my investable capital.
Okay. And to what extent do you think, in percentage terms, is that struggling?
I would say, well, struggling is an interesting term. So probably I'm concerned about 20, 25% of it. The stuff that was bought during 21, essentially.
Right.
Yeah.
Yeah. Okay, so how do you choose a sponsor then? Well, okay, and then you've done 30. Let's get back to allocator, the allocator
Yeah,
side.
yeah.
So the allocator side, so you've done 13 deals as an allocator, raised 9, and then partnered with others who have brought in 4. That
Yes.
right into those kind of aggregate 13. So
Yep.
how what kind of asset classes and how do you find sponsors and deals to do 13 deals that way?
Yes. So it's 18 deals that I've done
8.
in the last 2.5 years. So the due diligence process looks very different today than it did when I first started.
Ah,
I do
talk about
have,
that. Yeah.
yeah. So let's see, early on, when I was investing my own dollars, I was investing with folks that I found on podcasts that had large marketing budgets and big brands. I
Hmm.
learned pretty quickly that just because somebody's got a podcast and a big brand doesn't mean that they're a good operator. So there's been some evolution there.
Mm.
The first deals I raised on were groups that I had personally invested with first. Then I started meeting folks in the industry just by attending conferences, going to meetups, basic networking. And then I joined a large men's mastermind that has a very large passive investing community. And that's when I would say my due diligence really shot, my skills actually improved really dramatically because it's a very large, sophisticated passive investing community. Um, and that's where I found the last three groups that I've partnered with have
Mm.
come from very strong referrals from existing investors that have been investing and doing due diligence in the space for decades. Um,
Right. Just to understand the term. So, when you say investing with groups, you mean with sponsors? These are the
Sponsors,
sponsors that
operators,
recommend it.
GPs.
And you talked about your due diligence has changed a lot in the last 2.5 years.
Yep.
Describe what are the big shifts.
Yeah, so I'm looking more towards what I would call institutional quality operators, folks that have been around through multiple cycles, not just folks that were, um, you know, doing very well as the markets were growing, back through 2000, 17 through 21, I would say. So I'm looking for folks that have 15 to 20-year track records now that have been through downturns and have made it through those. Um, so looking for folks that are usually very specialized in what they do. They're not doing multiple asset classes, multiple business strategies. They're very focused on one strategy. I like folks that have heavy emphasis in the geographies where they're investing, not one or two properties and 50 different markets. Folks that actually have very large footprints. So that's probably the majority or the biggest difference that I've made. Um, I generally am only investing with people that I get referred to through folks that have strong investing experience with those operators now versus finding people through regular advertising channels. And the people that are out there really looking for capital, I find are the folks that I don't necessarily want to bring capital to.
That's
So
interesting.
I like the
Mm,
smaller,
mm.
um, kind of like I don't like the country club operators who raise from a small group of high net worth individuals that don't have big marketing budgets that are raising from investors just simply because they've been doing it for a long time and they're taking care of their investors.
It's interesting. So your focus is on the sponsor first. Uh,
Absolutely.
yeah. And to what extent do you what how do you okay, you've described actually the exact way that I screen sponsors as well.
Okay. Okay.
But when you see a deal, to what extent do you do due diligence on the deal itself, or do you lean into the confidence and trust that you have in the sponsor when you see
Yeah, good question. So
it?
um, my due diligence checklist is 100 plus questions, ranging between 95 and 110, depending on the day or week. I'm adding to and subtracting from that due diligence checklist
Okay.
constantly.
All right.
I would say probably 35 to 40 of those are actually operator specific, syndicator specific, where I'll do my due diligence on the operator, at least initially. And then once they pass the test, then I'll dig deeper into their deals. Okay. So yes, I'm absolutely doing due diligence on the deals as well. Because just because an operator has passed my due diligence doesn't mean that the deal is going to pass my due diligence. Um,
Hmm. Well, like what if you've got a sponsor? So I think about this as well. So you find a sponsor
yeah,
who you think is, how are we doing for time?
I think we're at 24 minutes recorded, and
But you're
we
okay,
got
right? You're
some.
good for time.
Yes, I'm
Okay,
good to
good.
the top of the hour. Yeah.
All right, good. Oh, good. All right. Um, so you find a sponsor who you like.
Yep.
You gain confidence and trust in them. What might it be if they think they've got a deal that they like that they want to do? What on the due diligence side
hmm
might throw a deal off that you think, oh no, they got it wrong, or what would it be that would say, oh no, I don't want to invest in this deal?
Yeah. So debt structures I look at real closely. I don't like any floating rate debt.
Right.
I just don't want to do that anymore. And some operators will still leverage that with heavier value add. I personally don't want to get involved in any of those deals right now because I think the uncertainty of the debt markets for the next 3 to 5 to 7 years really uncertain at this point.
Okay.
Um, there are operators that pass my due diligence that are going into new markets, and I never want to invest with an operator going into a new market. I like to see track record. I want to see them established. I want to see them have teams and feet on the ground
Mm,
before I'll invest with them in those new markets.
mm,
Um, let's see here.
okay.
What else kind of jumps out? Without having my list in front of me, I'm
No,
sorry,
no,
but
it's
yeah,
fine.
like debt structures are a big one.
And you
But
really
the
actually
thing that
go
I've
to, yeah,
been
go ahead.
digging into the most lately is
Yeah.
um, existing portfolio performance. I'm I've gotten to where I start asking for most recent investor updates for all of their active
Ah,
investments,
really?
and it it's interesting to see how operators respond when you ask that question because
Yeah.
that can be a pretty big task. If like the one operator, they've got 100 existing assets, like
Right.
that's a lot of information to share with somebody like me if they don't know me
Right. If you're not writing a
or if they're
$10
building a
million
relationship.
check. Yeah.
Exactly. Yeah. But if they don't want to share that information, that's okay. They're just not going to get my investor dollars, right?
Okay.
So,
And what have you seen when you've asked that and been given it recently?
yeah. So I see a lot of operators with struggling assets that they bought in 2021, 22. Um, and I'm struggling with that because some of those operators are doing really good deals today, but I'm not doing deals with them anymore because I'm concerned about how bad deals are going to impact their ability to perform on their newer assets. And I know legally the entities are separated from one another, but if you're a household and you've got one bad kid and one good kid, it's still a stressful household, you know, even if you're the good kid. So um, I don't know.
Let me tell you something. I'm going to jump in and I'm just going to tell you that is very, very wise.
Yeah.
When I was one of the hard well one of the first lessons, hard lessons that I learned. I'll just say this briefly because really I want to know about you, but I will share this.
Yeah, yeah, absolutely.
Was when I started in real estate in the 1980s. It's a very long
Hmm.
time ago.
Yep.
And I raised a lot of money in those days for a ground up multifamily shop that in the end imploded
Hmm.
during the savings and loan crisis. They weren't the only one. I mean, the whole industry collapsed basically.
Yep.
And it turned out that they had been commingling funds. It was called commingling. So you have multiple deals going at the same time. And, one's a little short. There's money coming into it next week, but it's a bit short. So there's cash over here in this deal. We'll just plug the gap. And when the money comes
Yeah.
in, we'll refund it. And then suddenly, that money doesn't come in. And before you know it, the whole house of cards collapses.
And
And
people are going to jail, right?
yeah, exactly, you end up going to
Yeah.
jail. And you just don't know as an outsider, even though I worked for the company, there was no sense. I was, in my 20s.
Yeah.
All I was done was here, take this placard and go and say nice things to investors, right? It was all
Sure.
right on, right? So I had no idea what was going on. And I'm not sure. Well, anyway, that's a serious hazard. So
Yeah.
when there's trouble, you never know how deep it's going, actually.
Right.
So
Right.
anyway, very, very wise to think that way.
Yeah. No, thank you. And you get a lot of frustration from operators that are in that position. And they've got a lot of great explanations and arguments as to why that these are still good deals that are coming out. But yeah, I'm
Well,
just
the
not
other thing
comfortable.
is that well, I don't want to get too deep into it, but you also have, shops with large overhead that need to keep feeding that. And the
Yeah.
way you do that is by doing more deals and harvesting more fees
Yeah.
to just keep the machine going. And I like to think of it as digging your way out of a hole. All
Yeah.
right, you
Gosh.
can't do
Yeah.
it. All
Yeah,
right, so
exactly.
let's change to a slightly different theme here. So, Randy, there's a lot of allocators. You've come into this industry in the last 2.5 years, and
Sure.
you've seen a lot of other people coming into the industry.
Sure.
So what makes you different? How do you stand out amongst? How do you? What's your unique value proposition when you go out and talk to investors?
Yeah. I mean, it's a great question. Um, I would honestly say that I am a recently retired W-2 sales guy, right? I was a very high performing sales guy, Fortune 100, Fortune 200
Mhm.
organizations. I've worked on very large projects and worked for very reputable brands. And my goal is to ultimately find 4 to 5 operators that I'm going to place the very large majority of my own capital with. And I want to share all the work that I'm doing with my investors. So I my avatar is generally high income W-2 sales professionals because that's what I was. So we speak the same language, we have the same fears, we have the same goals and aspirations. And I feel like I'm providing a great service by the due diligence that I do and the relationships that I'm building with the operators, hopefully for decades to come, ultimately. So
So you've actually answered a very important question preemptively, and that is so the deals that you bring money into as an allocator, you invest in those deals as well, your own money.
not every single deal, no. If I had the liquidity, I would, but I do not have the liquidity to invest in 18 projects over 2.5 years. I am 100% deployed at this point.
Ah,
Okay.
interesting.
And I have my liquidity requirements for myself that I maintain just for reserves. But as those continue to grow, then more gets deployed.
Right. So we are at getting towards the end. So I've got some sign-off questions, and
Sure.
then we're going to do this little LinkedIn thing afterwards as a little bonus for everybody, and we'll have a look at your profile and we'll talk about that. So we'll spend a few minutes doing
Fantastic.
that, and then I've got some other questions offline for you.
I
So,
love it.
so first of all, Randy, oh my goodness, 2.5 years in the real estate business. You came in a pretty tough time. Actually, you
Sure.
came into a great time that turned tough. What's been
Yep.
the hardest lesson you've learned so far?
Hardest lesson I've learned so far. Goodness. Gosh, for me, my biggest challenge is top of funnel strategy. Like, how do I get in front of more investors? That's the biggest challenge.
That's my second
Um,
question. What I meant was the hardest lesson in real estate.
yeah. Um, well, I mean, ultimately, the hardest lesson that I'm learning with my own dollars
Mm,
is that floating rate debt is not a good option 3 years ago, because now we're in a position where I have some personal dollars that are at risk because of the debt that was on those. So um, ultimately, that's the biggest learning and biggest
biggest
lesson.
lesson is debt. Debt is
Debt.
the killer.
It's the
That
number
is,
one risk. Yes,
yeah, big
absolutely.
risk. All right, so here, so now my second question, which you preemptively started answering, thank you
Sure.
very much. So, what have you found so far to be the most effective way of building your investor network?
Yeah, so a very large portion of my investors are people that were in my network already. So they are people I work with, people that were clients. Beyond that, it's really any type of avenue where I can spend more quality time with people, whether that be in-person meetups. I
Mm,
actually have a lot of investors that come from masterminds that I'm a part of. So a mindset community that I'm involved with. I've gotten 15% of my investors came from that community. Um,
mm,
but yeah, to me, it's like LinkedIn has been very, very powerful for me. Um, and ultimately, that's probably the single largest source, but it's
really?
just been a tool that's allowed me to connect with mostly my existing network. Um, so combination of those things. I have a podcast, which I think is a great middle of funnel strategy. I don't think it's a great top of funnel strategy. Being a guest on other people's shows has actually proven to be a very good strategy as well. So getting on other people's stages works
Hmm.
very well. But it's really not just one thing. I've got a lot of coals in the fire ultimately.
All right, we'll talk a little bit about that as well. I can give you some
Sure.
suggestions. Okay, if you could go back in time to the day before you started, 2.5 years ago, what advice would you give yourself?
Yeah. So higher minimum investment, focus more on accredited investors and not sophisticated investors, and really understanding that avatar and focusing on people that actually can place larger amounts of capital. versus the guy who's going to put 25 or 50 grand in one deal and wait 5 years to recycle those dollars.
I
Because
see.
that guy takes as much, if not more time than the guy who's going to do 50 grand a deal. So
And you do 506Bs as well. So you're talking about non-accredited investors, is that
that's
right?
correct.
Yeah.
Yes.
Okay.
Yeah.
Biggest misconception about the capital allocator business. What do you think that is today? He's thinking, just so you know.
Yeah. Yeah. For the listeners out there, he's thinking. Um, it's a very hard business. I think a lot of people come to this space because they think I think a lot of people try to do a lot of things because they think it's easy and they find out it's hard and they move on. So if you're coming into this space, know that this is a long game. You don't make a lot of money on the front end. You make the majority of your money on the back end. And if you don't have the long game in mind, you're probably better off just not even getting into the business, quite frankly. So
Beautiful. All right. Well, you've been doing very well preempting all of my questions because my last question was what advice would you give to somebody thinking about becoming a capital allocator? And I think you just said it, but if you've got any other thoughts on that, yeah.
yeah, well, I mean, the very first thing I always tell people that are getting into the space is invest some of your own money first so you know what it is that you're actually doing.
Mm.
Um, you can't possibly have credibility as a capital allocator if you don't have money in the game as well. So if you're a guy who is trying to make his first buck and trying to get rich as a capital allocator, I think there are better paths to do that than this. So
Randy Smith, Impact Equity, such a pleasure. Thanks for joining me today.
thanks so much, Adam.
Right now, we are going to do a little bonus for a few minutes and have a look at your LinkedIn profile. You okay doing that?
I love it. Yeah,
I'm going to go ahead and screen share here. Let me pull this
love
over
it.
here. You did say you worked for some big companies, but you didn't mention which ones. But of course, now being here on the old LinkedIn, we're going
Yeah.
to see who they are. And I'm glad that we are because I actually had consulted with one of them
Oh,
when I
very
was in
good.
Japan.
Very good.
So you worked for American Express for a long time.
I did.
I actually did a lot of research for American Express when I was in Japan. I had one
Fantastic.
iteration for about a year after I had learned to speak Japanese and anyway, so I have a lot of very fond thoughts and a deep appreciation for the quality of the professionals that work at American Express.
Yeah, it's an amazing brand and
Yeah.
great company and fantastic leadership. It
Oh
was
yeah.
the best 10 years of my career.
Oh,
Yes.
lovely. That's really
Yeah.
nice to hear that. Yeah, I really enjoyed working with the team there. And it did give me because of the work that we did, it gave me a real deep sense of their professionalism and the quality of the people. So anyway,
Very good. Yeah.
right. So let's have a look at your profile Aruna here.
Okay.
I'm gonna run through some real basics. And by the way, I am going to pitch my mastermind. Please come and join my mastermind because it's 4 days. It's uber inexpensive, far too inexpensive. It'll probably put you off, actually. You think it's not worth anything, but it's coming up in February.
Okay.
So you get, but I'm going to give you the highlights now. So first of all, you need to have so I'm going to describe it. So Randy has, for those who are on podcasts, but if you want to go to YouTube or go to gowcrowd.com to the podcast page and watch the video there. So you can actually jump to this if you want to about 40 minutes in, 35, 40 minutes in, and you'll see me screen sharing. So it'll be easy to find. So Randy's got a nice banner, but he doesn't have any language on the banner. So I don't know what the value is of. I don't know what he does. It doesn't say anything. There's no value statement here.
Yeah.
Whereas on his website, which is kind of cool over here, Impact Equity, he's got meet your investment goals with Impact Equity, passively increasing real estate to decrease your dependence on W-2 income. So what I would suggest is that you use some of that language here. That would be number one. And then the other thing I would suggest you do is take this image in the background, which I hope is a deal you've invested in. It's something that yes,
It
good.
absolutely
Okay,
is.
good.
Yeah.
Consistency. So use that background over here as well so that there's a link. You want consistency through all your messaging. So when somebody navigates from LinkedIn to your website, they know it's you. It's good because you got your logo there. So that's pretty dominant and very cool, and
Sure.
that does connect to link. But those are a couple of other things. So tell people why, what do you do? And that's a good thing to put in. There's more, but that's a good thing to do. The other thing that
Okay.
you want to have underneath underneath his name here, he's got crushing sales professionals, golden handcuffs through passive investing in real estate. Perfect. That's very nice. And there's some other things that you could do there, but you don't have a call to action here. So in this section, there's a few things that you can do. One, you've got to book a call on your website.
Hmm.
And I'm just guessing you probably don't get too many people clicking that, do you? Or booking calls with you, or do you?
From my website.
Book a call. Do people use this much? And then when they do they show up?
Um, I have a pretty good show up rate, but yeah, the volume is not that
Low.
large.
So we've
Yeah,
tested that 1,000 times. What you better do. Do you have a newsletter? You got a podcast?
I
Do you,
do.
do you send out regular emails to your network?
I do.
You do? Fine. So sign up to my newsletter. It's much easier. Get first name and email address. And then over time, you can encourage people to book a call. All right. And if you're still doing 506Bs, I don't know why anybody does those anymore. I don't care what scale you are. I just don't know why anyone does Bs. But anyway, if you do need,
90% of all deals are 506Bs.
yeah,
So there's got to be a
maybe
reason, right?
90% of all the deals you look at are 506Bs. But I did a study. We scraped the SEC database in a few years ago, and I actually wrote a book about the transition from Bs to Cs, basically. So there's actually you'd be surprised how many are 506Cs. But anyway, that's a whole different discussion over there. But the only reason it comes up is because I know that you may have to establish a relationship, and so you've got to jump through some hoops. But at first contact, get an email address, start communicating by email, get them on the list. You can always have that call later. You can always, get to know them a bit later. So that's something. Then you need a call to action inside here,
Perfect.
which is at the top of your page here. Now, the other thing that you want to do is let's go down to your featured. So we'll actually have a quick look at your about section. Okay, I actually like to put the whole point of LinkedIn is to make contact, right? I mean, that's what you want to do. So what I would do here in the about section is let people know how to contact you. Put a name, put your email address and your phone number. Let's have a look at your contact info. Okay, good. So you've got this all nice in your book, in your about section, sorry, contact info section. You've got that all laid out, but put it in your about section as well. Why not? All right. You may as well. All right. Put it right there. Then come down to your featured section. And I'm going to get into some really high powered stuff in a second. But in your featured section, you've got, I used to do this as well, by the way, but and you've got all posts. Get rid of all of these. What you need to have here is, again, one or two featured sections, not posts, that lead to top of funnel lead generation forms. So let's jump back to your website here and we'll take a look at, let's have a look. So how do we, you see, there's nowhere to sign up for anything. You got to have that. You want to make it as easy as humanly possible for your prospects to sign up and give you their name and email address so you can communicate with them. So the fastest way we get to that is contact page. Even this isn't easy, right? Above the fold is a map and everything. And then finally we get to a form that you can fill out. So and this is also I'm guessing what CRM do you use?
Active campaign.
And will this trigger an auto email response, this form?
Yeah.
It will. Okay, good. So you've got some auto emails. So you want to have a thing here. Really, you want to have a pop up.
There is a pop-up when you come to the screen for my due diligence checklist.
Oh yes, you've
But
got top of funnel stuff. I get that, but I'm saying here on your homepage, you
right.
you want to have immediate, easy ways for people to reach you. So I have this on my. So mine is this one here. I actually set mine up different, but here, give me your name and email address. You're on the newsletter. Right
Mhm.
at the top, it's just give me your email address, right? Sign up. I'm actually going to I'm going to modify I'm editing my website right now.
WordPress,
But
yeah.
in any event, it's just give me your email address and here's why. For our clients, for what you might say here is sign up to my educational newsletter and get priority notification for the next opportunity. In other words, why should you
Okay.
sign up? I'm going to get a newsletter and I'm also going to get treated specially, right?
Right.
Like better than anybody else. Get the name and email address and you can do the rest there. And the reason I say that is what you want to have on your featured section is direct links to that sign up and give me your email address, not
Right.
a post. So on my LinkedIn profile, let's just jump over that. LinkedIn. So anybody watching this is actually going to see my whole thing is going to change because I'm actually editing it now. So here you can see subscribe to my newsletter. That's a straight link to my subscribe page that I just showed you. And I just changed this. So featured, two top of funnel promos. So one could be, did you say you have a book,
Yeah.
Randy? You
Yeah.
got a book.
Scroll to the
Where will I
bottom.
find that?
It'll pop up when you go to the page first, or if you scroll to the bottom, you can find it there as well.
Okay. Ah, here. Is there a dedicated page to this anywhere?
I don't know.
Yeah,
I
so you
can.
might want to have a dedicated page that looks a little bit like this. This is one of my best performing top of funnel pages. It's also a book. I won't go into the details of what's in it, but anyway, so it will fall here. And so you can send people to this page, right?
Right.
So that's what you might do here is
Huh.
have a link that says, get my book. Now, you can't do that now
Yeah.
because the only way to get somebody to that page is here and then they've got to scroll down, right?
Mhm.
So we can't do that. So that's what you should do here. And then my profile, here's one that goes to this landing page. I'm going to be editing that as well. And it's a straight link. You notice that there's no click.
Sure.
So
Yeah.
here's another link. Here's this LinkedIn mastermind. I've set the dates. So this is also going to change fairly soon. But those are direct links directly to, that's what you want to have here. All you're trying to do with LinkedIn is capture leads. So you want to make it as easily as possible for people to capture leads. I mean,
Right.
for people to give you their name and email address.
Right.
Uh, okay. You've got Randall Smith, but you're known as Randy. So I would change that to Randy
Okay.
if I were you. Just because that is how people know you. And then one other thing. So now let's have a look at this. So we take a look at comments. Okie dokie. Okay, 4 hours ago. Okay, commented 4 hours ago, 9 hours ago, replied to their own comment on this. And then this one also not okay. So you did a bit there. So how much time do you spend on LinkedIn each day?
It depends. I try to spend 15 to 30 minutes a day on there, but it doesn't always happen.
Okay.
It's calendared, but
Okay.
it is the first thing to get overwritten.
Get
So,
killed. It's actually the first thing that I do, and I do it religiously.
mhm.
And it's, as I told you, it's yielding some really incredible results for me. So, a couple of things that you might want to think about. And this is really what the mastermind training is largely about. One, posting on a regular basis. So, you want to be posting at least 3 times a week. I post 5 times. 3 times is a kind of minimum. And there are all kinds of tactics for posting. But here's the key thing, and this is where I'm going to show you the magic happens. So when you post 30, and you want to be posting at the same time every day, Randy. So there are best times of day to post. You can look it up, and this time, and this is better for the
Yep.
East Coast and better for the West Coast, and this, that, and the other. You know what? The best time of day to post is the time of day that is the most convenient for you because what you want to be doing is commenting for 30 minutes before your post goes live and for 30 minutes afterwards, and then commenting on the comments on your post. So you want to be dedicating an hour a day split around that one moment when you actually post. And I'm going to show you how to do that easily.
Okay.
So my bet, just a wild guess, when you post, is that you go to your main feed. Sorry, when you comment, you go to your main feed, you hit home, and you scroll through. Is that how you do it?
Yep.
Yeah. That is super random. And actually, is this my feed? Oh, this is my feed. That is not your feed, of course. But it's incredibly random. Like, how do you can say it's not an efficient way to do it. So I want to show you an efficient way to do it. So what I've done is I've actually created, and I'll share one of these with you because you can actually copy this and use it yourself. So I create what I call spheres of influence. Oh my goodness me. So think about the spheres of influence that you might have. One sphere of influence might be prospective investors. Another might be people who run conferences, right? Like the big names in the who run the conferences that you go to, right? They're like the real major people. Another might be journalists, right? For example, that you follow and you want to learn about, etc., etc. So what you do is you create these lists, and I'll show you one of them here. So we did a mastermind. I did a mastermind in December. We had about 60 people in it. So here's about 60, little over 60 people. So this list here, when I click on that, what this is showing me is inside this list are 26 people, right? 26 people here. And I can see everything that those 26 people, that sphere of influence, posted in the last 24 hours. Oh my goodness me. So I go on every day. I go on at 5 a.m. I have some for 5:30 I start this. So my post hits at 6. I'm on at 5:30 and I go through to 6:30 or 7. I actually really enjoy it. That's when I consume coffee and toast, and it's a quiet time and I like to chat and have fun with people actually. So you click, right? So now I can see so now this is highly tailored. I mean, this is hyper focused posting. I've got a list here, so I've got so I go through those. I like to follow some of the big thinkers in the industry. So these are people that have over 100,000 followers. So occasionally they comment on my comments. And when that happens, I often get DMs from people saying, I saw you on Ray Dalio's post, or I saw you on Jason's post, or I saw you on Ben Carlson's post, or your comment over there, and I'd like to connect. And when they do that, I always, right, I'll show you something, another thing in a sec. Are you good for time? Are we running out of time?
Yeah, I have to drop for another thing here in about 1 minute. But
Okay. I'm
yeah,
going to stop there. Those are the highlights.
I love
So
it.
I'm going to send you a link to the mastermind. It will dramatically improve your networking on LinkedIn. You'll find more people top and bottom of funnel. Uh, Randy, thanks for joining me and thanks for being proactive. Stay in touch. All right.
Absolutely. Thanks so much, Adam.
All right. Bye. All right. That was Randy Smith of Impact Equity. Randy, what an enormous pleasure meeting you. I really just so thrilled that you emailed me and said, I am an allocator. Interview me. So thanks for that. And thanks for your time. Sorry I went a bit over. I didn't mean to do that. I do get going. I really enjoy it, as you can probably tell. Anyway, thanks for joining me. If you do want to know more, I'd be happy to finish that up with you and show you some of those tactics that are working so well for me and for other people that have been through the mastermind. Okay, so just let me know. And thank you to dear viewers for joining us today. I hope you enjoyed it. I hope you stuck around for that LinkedIn bit at the end. It was kind of cool, actually. But I also hope that you are beginning to understand how this allocator industry is working from guys like Randy, who are open book and kind enough to explain what they do in detail and how it works. It's really, really interesting. So I hope you enjoyed it. But that is all I have for this week. Until next time, this is Adam Gower signing off.